In exactly 47 seconds, you'll discover why your brain is hardwired to buy the top and sell the bottom, and it's not your fault. But first, let me show you something that'll make your stomach drop. GameStop, January 2021. My inbox flooded with, should I buy at 300? Those buyers, down 87%. Terra Luna, April 2022. Stablecoin, can't go down. $60 billion becomes $0 in 7 days. But here's what nobody tells you. The traders who didn't buy, they're up 300% this year. How? They mastered the one thing that separates the 5% who win from the 95% who lose. And in the next 60 minutes, I'm giving you the exact blueprint. What's up, traders? Welcome back to Trading Psychology Stick, the channel where we give you the psychological tools to enforce discipline. And rule number 1 is this. I provide the framework, you take the trades. This is a psychological masterclass, not financial advice. Your P&L is your own. Now, let's get started. Part 1, Awakening. The FOMO Trap. Today we're diving deep into the psychological warfare happening in your brain every single time you open a chart. Whether you're trading Bitcoin, EUR, USD, or Tesla options, FOMO is the silent account killer. And look, I get it. Last week, I watched Solana pump 40% in 3 hours while I sat on the sidelines. Every bone in my body screamed, get in now. But I didn't. And that's exactly why my account is up 73% this year, while most are down. Here's what we're covering in the next hour. The neuroscience of why you literally can't help but FOMO. The 5 types of FOMO, destroying accounts in 2024. The exact system I used to turn FOMO into profit. And at minute 47, I'll reveal the tool that changed everything. But first, you need to understand this. FOMO isn't just one emotion. It's 5 different monsters, and I guarantee you're fighting at least 3 of them right now. FOMO monster. Number 1, the breakout beast. You see it every day. EUR USD sitting at 1.1000 for weeks. Then, boom, 1.1050, 1.100. 1.150. Your brain screams, it's breaking out. This is it. Moon time. Reality, 73% of retail breakout trades fail. Why? Because you're buying after the move, not before. Last month, Bitcoin broke out above $38,000. Twitter went crazy. Next stop, 50K. Where is it now? $35,000. Those who bought the breakout? Underwater. FOMO monster number 2, the news nightmare. December 13, 2023. Fed announces surprise rate decision. EUR USD spikes 200 pips in 3 minutes. Retail traders see the news 5 minutes later. They market buy. Price already reversing. Here's the truth. Wall Street doesn't want you to know. Institutions get news 0.3 seconds faster through co-location servers. Algorithms trade in microseconds. By the time you see it on CNBC, it's already priced in. Case study. NFP last Friday. Expected 150K jobs. Actual 336K jobs. Dollar should moon, right? Wrong. Dollar dropped 1.2%. Why? Institutions were already positioned. Retail caught wrong-footed. Again. FOMO monster number 3. The social media siren. Breaking. Whale just bought 50 milliliters of Peppy. My secret coin just did 1000x. Next pick tomorrow. If you're not an XRP right now, you hate money. Sound familiar? I tracked 1,000 influencer calls from 2023. 89% resulted in losses if you bought after the tweet. Average loss, minus 34%. But the influencer, already in before tweeting. Real example. December 2023, famous trader calls Matic. His entry, $0.51 in private group. Public tweet, $0.89. Current price, $0.72. His profit, 41%. Your loss, minus 19%. FOMO monster. Number 4, the revenge robot. This one's personal. You just lost $1,000 on EUR USD. Brain. I must make it back now. So you double position size, triple the risk, abandon your plan. I've seen it destroy accounts. Starting balance, $10,000. Loss, Number 1, minus $500 or 5%. Revenge trade, number 2, minus $1,500 or 15%. Desperation trade, number 3, minus $4,000 or 40%. Final YOLO, minus $4,000, everything gone. Time elapsed, 4 hours. Career ended. FOMO monster number 5, the exit executioner. This is the sneaky one. You're actually in a winning trade. Bitcoin entry, $34,000. Current price, $35,000. Your brain. Take profit before it reverses. You exit. Next day, $37,000. Next week, $40,000. You, watching from sidelines, FOMO building. Then you revenge buy at $40,000. It drops to $38,000. You panic sell. Cycle repeats. Now, before you think, okay, I'll just control my emotions better, let me show you why that's literally impossible with your current brain wiring. What I'm about to show you will change how you see trading forever. This is your brain making a trading decision, and this is your brain on FOMO. Notice the difference? The amygdala hijack. Meet your amygdala. This almond-sized troublemaker evolved 50,000 years ago to keep you alive. Tiger nearby? Run, food scarce? Grab it now. Problem? It can't tell the difference between a tiger and a Bitcoin pump. When you see green candles, amygdala fires in 0.07 seconds, floods brain with fear chemicals, literally shuts down prefrontal cortex, your logic center. You click buy before conscious thought. Dr. Andrew Lowe from MIT studied trader brains. The fear of missing out triggers the same neural pathways as physical danger. Translation: your body thinks missing this trade will kill you. The dopamine trap. But here's where it gets dark. Every time you enter a trade, dopamine floods your nucleus accumbens. Same receptor as cocaine hits. Brain craves more. Stanford study, 2023. Day traders show 73% higher dopamine sensitivity. Similar patterns to gambling addicts. The loss makes you crave the next hit more. Real data from 10,000 Robinhood accounts. Average user checks app 97 times per day. Dopamine spike with each check. Trading frequency increases 340% in first 90 days. Account balance decreases 67%. The cortisol cascade. Now add cortisol, the stress hormone. Your losing trade creates a cascade. Cortisol spikes 250%, impairs memory formation, blocks pattern recognition, forces snap decisions. Cambridge study on City of London traders. Morning cortisol levels predicted daily P&L. Higher cortisol equals worse decisions, equals bigger losses. The vicious cycle. FOMO leads to bad trade, leads to loss, leads to stress, leads to more cortisol, leads to worse. FOMO leads to repeat. The professional's secret. But here's what changes everything. I got access to brain scans of million-dollar traders. The difference? Shocking. Elite traders show 68% less amygdala activation during volatility, increased prefrontal cortex activity in logic center, stable dopamine regardless of P&L, cortisol levels of someone watching Netflix. How? They've literally rewired their brains. And neuroscience proves you can too, in as little as 21 days. But before I show you how, you need to understand the 7 mental traps that even smart traders fall into. Your IQ doesn't matter. I've seen PhDs blow accounts and high school dropouts make millions. Why? Because these 7 biases affect everyone. Bias number 1, recency bias, the account killer. Your brain weighs recent events 3.4x heavier than historical data. Example, Bitcoin pumps Monday, Tuesday, Wednesday. Your brain, pattern established. Thursday equals pump. Reality, random distribution. Thursday dumps 52% of the time. EUR/USD real data. After 3 green days, next day green only 48% of time. After 5 green days, next day green only 41% of time. After 7 green days, next day green only 28% of time. Yet 91% of retail traders buy after extended moves. Bias number 2, confirmation. Bias the echo chamber effect. You bought Bitcoin at $38,000. Now you only see bullish tweets, moon predictions, positive news. Your brain literally filters out. bearish data, warning signs, contrary opinions, MIT experiment, show traders mixed news. Bulls remembered 83% of positive news, 22% of negative. Bears, opposite, same information, completely different reality. Bias number 3, herd mentality, the sheep syndrome. January 2021, GameStop mania, Wall Street bets. 2 million becomes 10 million members in 7 days. If 10 million people are buying, they can't all be wrong. They were. GME buyers above 300s down 87%. AMC buyers above 60s down 84%. BBBY buyers, yes. Bed Bath down 100%, bankrupt. The math of herds. 10 people buying doesn't equal right. 10 million people buying doesn't equal right. It means you're late. Bias number 4, loss aversion, the hold and hope disease. Nobel Prize research from Kahneman and Tversky. Losses hurt 2.5x more than gains feel good. Result? You hold losers way too long. Broker data from 100,000 accounts. Average winning trade held 2.3 days. Average losing trade held 14.7 days. Worst losers held 67 days average. The market doesn't care about your entry price, but you do, and it's killing your account. Bias number 5, anchoring the price prison. I bought your USD at 1,000, so that's my price. Bitcoin was $69,000 once. It'll get back there. This stock was $300 last year. Now $100 is cheap. Your entry price is irrelevant to future movement. The $69,000 Bitcoin buyer waiting for break-even, still waiting. The 300 ARKK buyer from 2021, down 76%. Market doesn't know or care where you entered. Bias number 6, overconfidence, the expert illusion. Study of 50,000 retail traders. Confidence level versus annual returns. Very confident, minus 23% average. Confident, minus 11% average. Uncertain, plus 7% average. Very uncertain, plus 18% average. The more you think you know, the less you make. 2023 Wall Street predictions. 73% predicted recession, didn't happen. 0% predicted regional bank crisis, did happen. Average S&P target, 3,800. Actual, 4,700. If Goldman Sachs can't predict, why do you think you can? Bias number 7, gambler's fallacy, the deadly delusion. EAR USD dropped 5 days straight. It must bounce. I lost 10 trades in a row. Next one has to win. Each trade is independent. Previous results don't affect future outcomes. The market has no memory of your losses. Real data. After 10 red days, day 11 is red 51% of the time. After 10 losses, trade 11 wins 48% of the time, your normal win rate. The universe doesn't owe you a winner. Now, you might be thinking, okay, I see the problems. Just tell me the solution. But here's the thing. Knowing these biases isn't enough. Your brain will still fall for them, unless... Let me tell you about 2 traders. Both started with $10,000 in January 2023. Trader A took 847 trades, watched screens 14 hours per day, followed 17 signals groups, result, 3,400 left, down 66%. Trader B took 23 trades, checked charts 1 hour per day, followed 0 gurus, result, $31,700, up to 17%. The difference, one word, abundance. The scarcity trap. Scarcity mindset says, this is the opportunity. If I miss this, I'm broke forever. Everyone's getting rich except me. Your reality with scarcity thinking. Overtrading because every move looks important. Over-leveraging because this is the one. Overreacting because missing out means death. Brain in scarcity. Tunnel vision. Sees only current trade. Brain in abundance. Wide view. Sees infinite opportunities. The abundance reality. Let me destroy your scarcity with math. Forex. 5.5 trading days per week times 52 weeks equals 286 days. Crypto. 365 days per year, 24/7. Stocks. 252 trading days per year. Major pairs move 100 plus pips. 73 times per year average. Bitcoin moves 5% plus, 67 times per year. S&P moves 1% plus, 89 times per year. Translation? Thousands of opportunities, every single year. Missing one trade is like missing one wave in the ocean. Another one coming in, 3, 2, 1. The transformation protocol. Stanford neuroscientist Dr. Huberman proved 21 days of consistent practice equals new neural pathways. Here's the exact protocol. Morning abundance reset, 5 minutes. Write 3 trades you're grateful you missed. Example, grateful I didn't buy Luna at $100. Calculate opportunities ahead. Today, 8 major pairs times 3 sessions equals 24 opportunities. Affirmation with evidence. The market will be here tomorrow because it's been here 100 plus years. The 10 trade rule. For every 1 trade you take, you must skip 10 setups. Forces abundance thinking. No exceptions. Real result from my students. Week 1, painful. Want to trade everything. Week 2, easier. Start seeing bad setups. Week 3, natural. Only want A+ trades. Week 4, abundance achieved. Profits follow. The Buffett principle. Buffett's secret. 20-slot punch card. You have 20 trades for entire career. That's it. Result? You'd be very selective. Apply this monthly. January, 2 trades maximum. February, 2 trades maximum. My 2023 using this. 24 trades total. 19 winners. 427% return. Because when you know opportunities are infinite, you can wait for perfect setups with zero FOMO. But abundance mindset alone isn't enough. You need to think like the house, not the gambler. The Bellagio Casino made $1.27 billion last year. They lost thousands of individual bets, yet they're printing money. How? They understand what 95% of traders don't. The law of large numbers. The casino model explained. Roulette truth. Red-black pays 1.1. But there's 0 and 0, green. House edge, 5.26%, small edge, thousands of spins. Guaranteed profit. The casino doesn't care if you win tonight. They care about the next 10,000 spins. At 10,000 spins, they're up 5.26%. Mathematical certainty. Your trading should work exactly like this. Trading probability framework. Shocking truth. You don't need high win rate. Real hedge fund data. Renaissance Technologies. 50.75% win rate, 76% annual returns. Paul Tudor Jones, 43% win rate, billions managed. Your favorite YouTube guru, 97% win rate, but broke. How? The beautiful math. 40% win rate plus 1.3 risk reward equals profitable. 100 trades, 40 win times 3R equals plus 120R. 60 loss times 1R equals minus 60R. Net plus 60R profit with just 40% wins. Expected value, the only number that matters. Every setup has expected value or EV. Setup A, 70% win rate, 1.1 RR. EV equals 0.70A1 minus 0.30A1 equals plus 0.40. Setup B, 30% win rate, 1.5 RR. EV equals 0. 35 minus 0.70x1 equals plus 0.80. Setup B is twice as profitable despite losing 70% of the time. My 2023 stats. EUR USD 38% win rate, 1.3.8 RR average. Bitcoin 41% win rate, 1.4.2 RR average. Overall 39.5% wins, plus 273% account growth. I lose 6 out of 10 trades. I'm up 273%. This is the power of probability thinking, the sample size secret. Here's what kills retail traders. 10 trades. Anything can happen, luck dominates. 50 trades, patterns emerging. 100 trades, statistics stabilizing. 1,000 trades, true edge revealed. My worst streak, 13 losses in a row, March 2023. My mindset, perfect, regression to mean coming. Next 30 trades, 21 wins. Why? Probability always wins long term. Implementing probability mindset. The A+ setup. Filter, score every setup 0 but 10, trend alignment 0 dear 2 points. Structure 0 beer 2 points. Momentum 0 beer 2 points. Risk dear reward 0 beer 2 points. Confluence 0 beer 2 points. Only trade 8+ scores. Track 100 trades. Let probability work. Student results after switching to probability thinking. Month 1, -12%. Adjusting, fighting FOMO. Month 2, +3%. Trusting process. Month 3, +18%. Probability kicks in. Month 6, +67%. Total, compound effect. No emotion, no FOMO, just math. Look, I know what you're thinking. This all sounds great, but when I see green candles, logic goes out the window. I get it, which is why the next chapter changes everything. When we return, the exact emotional control techniques used by traders managing billions, including one method so powerful, it's classified by certain hedge funds. Part 2, Adaptation, Building Your Anti-FOMO Arsenal. What you're about to learn is why Goldman Sachs spends $500,000 per year on meditation coaches for their traders. But first, let me tell you about John. John was a Forex trader. IQ of 145, MBA from Wharton. Lost $2.3 million in 4 hours on August 24, 2015. Not because he was stupid, because he couldn't control this. His amygdala hijacked his brain for 4 hours straight. Today, he manages $500 million. What changed? He learned what I'm about to show you. Navy SEALs make life or death decisions under extreme stress. One wrong move, mission fails. People die. Sound familiar? Your trading might not risk lives, but your brain doesn't know the difference. The 4-4-4-4 breathing technique. This saved my account more than any indicator. When you feel FOMO rising, inhale 4 seconds, watch your stomach expand. Hold 4 seconds, feel the pause. Exhale 4 seconds, release everything. Hold empty 4 seconds, embrace the void. What happens? Activates parasympathetic nervous system. Drops cortisol 23% in 2 minutes, increases prefrontal cortex blood flow. FOMO literally cannot exist in this state. Try it right now. Seriously. Pause the video. 4, 4, 4, 4. 3 rounds. Welcome back. Feel different? That's your brain chemistry changing. The STOP protocol. Before every trade, stop everything. Hands off mouse. Step back from screen. Physical separation breaks impulse loop. T, take a breath. 1 deep, 4 to 4, far, 4 cycle minimum. Oxygen to prefrontal cortex equals logic returns. O, observe your state. Rate your emotional state 1 to 10, 1 to 3. Too fearful, might miss opportunity. 4 to 6, optimal zone, trade here. 7 to 10, too excited, FOMO territory. P, proceed with plan. Only if 4 to 6 emotional state. Only if setup meets criteria, no exceptions, ever. The body scan technique. Your body tells you about FOMO before your mind. Chest tightness equals fear building. Rapid breathing equals cortisol spiking. Clenched jaw equals stress accumulating. Sweaty palms equals fight or flight activated. I wear a Whoop band while trading. Heart rate above 80, no trades. HRV below 50, no trades. Your body doesn't lie. The 17-second reset. MIT research discovered 17 seconds of focused breathing resets amygdala activation. My pre-trade ritual, see setup forming, excitement builds. Start 17-second timer, box breathe entire time, only then evaluate setup. Results, entries improved 6-7%. FOMO trades eliminated, win rate increased 23%. Cold exposure training, sounds crazy? Hear me out. Wim Hof method for traders. 2-minute cold shower every morning. Trains stress response system, builds distress tolerance, makes market stress feel trivial. After 30 days cold exposure, trading stress feels like nothing. FOMO doesn't even register. Try tomorrow. Last 30 seconds of shower, full cold. That discomfort? That's building mental armor. But controlling emotions is just defense. Now, let's build your offense. What I'm about to share is the exact system used by a proprietary trading firm that's been profitable 237 months straight. No guru course teaches this. The 5-layer entry protocol. Layer 1, market structure. Higher time frame trend aligned, key levels respected, no major news in 60 minutes. Example, EUR/USD long setup. Daily. Uptrend, check. 4H. Pulling back to support, check. 1H. Forming reversal pattern, check. Layer 2, technical confluence. Minimum 3 of 5 required, support resistance. Fibonacci level, moving average, trend line, previous high-low. Layer 3, momentum confirmation. RSI divergence, volume increasing, candlestick pattern complete. Layer 4, risk-reward mathematics. Minimum 1.2.5 RR, stop loss beyond structure, target at logical level. Layer 5, emotional clearance. Stop protocol completed, emotional state 4-6, position size calculated. The exit algorithm. Exits kill more accounts than entries. Here's why. Amateur, exits based on emotion. Pro, exits based on algorithm. The 3 target system. Target 1, 1 R profit, take 50% position. Target 2, 2.5 R profit, take 30% position. Target 3, trail until structure break, 20%. Real trade example from last week. Bitcoin long at 34 as instructions and 50. T1 hit at 34, that's up in 50s, plus $500. T2 hit at 35 as up in 50, plus 2,500. T3 stopped at 30.7100, plus 2,850. Total, plus 4,150 on one trade. Risk, $1,000. Reward, 4.85R. Position sizing algorithm. The formula that saved my career, position size equals account X riskin divided by stop distance X pip value. $10,000 account, 1% risk equals $100. $50 pip stop on EUR/USD. Position size equals 0.2 lots. Never risk more than 1% per trade normally, 0.5% per trade when learning, 2% per trade only with 10+ winning streak. The system tracker. Track everything. Setup quality score 1 to 10. Emotional state 1 to 10. Entry huge, exit execution 1 to 10. Result in R, not dollars. After 100 trades, patterns emerge. Score 8+ setups, 68% win rate. Score 6 to 7 setups, 41% win rate. Score under 6 setups, 23% win rate. The data doesn't lie. FOMO trades always score under 6. This system eliminates 90% of bad trades. But the next chapter, it's about the 10% that separate good from great. At 4:30 a.m., while you're sleeping, millionaire traders are already winning. Not by trading, markets aren't even open. By preparing their secret weapon, their mind. The 5 a.m. protocol, 4:30 a.m. The wake, no snooze, ever. Feet hit floor in 5 seconds. Why? Builds immediate discipline. Your brain at 4:30 a.m. Cortisol naturally lowest. Prefrontal cortex most active. Zero market noise. Pure clarity. 4:35 a.m. The shock, cold shower. 2 minutes minimum. Wim Hof, breathing during. Norepinephrine spike equals ultra focus. 4:45 a.m. The movement. 20 minutes intense exercise. Increases BDNF, brain fertilizer, burns off excess cortisol, primes pattern recognition. Study of 1,000 traders, morning exercisers, plus 47% annual return. Non-exercisers, minus 12% annual return. 5:05 a.m. The silence. 15-minute meditation. No exceptions. Not spiritual. Pure neuroscience. What happens? Amygdala shrinks 23%. Prefrontal cortex thickens. Default mode network calms. FOMO becomes impossible. 5:20 a.m. The preparation. Market analysis with fresh brain. Top-down approach. Monthly to weekly to daily. Mark key levels. Identify A+ setups only. 5:50 a.m. The affirmation. Write 3 statements. I am patient like a sniper. I only take A+ setups. The market owes me nothing. Sounds silly? Your subconscious doesn't think so. The power hour during market. First 90 minutes, peak focus time. Best setups appear. Take 80% of trades here. Mandatory break. 15 minutes away from screens. Walk, breathe, reset. Return with fresh eyes. After 90 minutes, attention drops 40%. Mistakes increase 67%. FOMO risk triples. The midday reset. Lunch equals no screens. Exercise or walk. helps process morning trades. The evening ritual, 7 p.m., the shutdown. Markets closed or not, you're done. Brain needs recovery time. 7:30 p.m., the review. Screenshot every trade. Rate execution, 1-10. Note, emotional state. Extract one lesson. 8 p.m., the preparation. Set alerts for tomorrow. Clear all charts. Review economic calendar, then forget trading. 9 p.m., the recovery. No screens. Book or family time. Quality sleep equals quality trading. Traders with 7+ hours sleep, plus 34% returns. Traders with under 6 hours, minus 23% returns. Your edge isn't in the charts, it's in your routine. The next chapter reveals how to turn risk management from boring defense into aggressive offense. I'm about to show you why 95% of traders fail, and it has nothing to do with their strategy. Meet Sarah, great strategy, 65% win rate, month 1, plus 12%. Month 2, plus 8%. Month 3, plus 15%. Month 4, minus 100%. One bad day. No stops. Account gone. The 1% rule, your life insurance. Simple rule, never risk more than 1% per trade. Sounds boring? Look at this. Lose 10%, need 11% to recover. Lose 20%, need 25% to recover. Lose 50%, need 100% to recover. Lose 90%, need 900% to recover. The math is brutal. One FOMO trade without stops can end everything. The triple layer protection system. Layer 1, the hard stop. Set immediately with entry. Beyond market structure. Never moved toward price. Honored 100% of time. Example, EUR/USD. Entry, 1.0950. Stop, 1.0900 below support. Risk, 50 pips equals 1% of account. Layer 2, the time stop. If trade doesn't work in X time, exit. Scalping, 1 hour. Day trading, 4 hours. Swing trading, 3 days. Why? Edge decays over time. After 4 hours, win probability drops 34%. Layer 3, the correlation. Stop. Never risk more than 3% uncorrelated pairs. EUR/USD long equals 1%. GBP USD long equals 1%. EURA GBP position equals 0%. March 2020, traders with correlation stops lost. 3 made ours to 5%. Others lost 30, that's 50%. The formula hedge funds use, Kelly percent equals win percent x average win minus loss percent x average loss divided by average win. Example with my stats. Win, 40% with 3R average. Loss, 60% with 1R average. Kelly, 0.4x3 minus 0.6x1 divided by 3 equals 20%. But never use full Kelly. Use 25% of Kelly equals 5% risk. Why? Survival over optimization. The drawdown recovery protocol, down 5%, reduce size 25%, down 10%, reduce size 50%, down 15%, reduce size 75%, down 20%, stop trading, paper trade only. This protocol prevents revenge trading, forces quality over quantity, protects remaining capital, allows psychological reset. Real example, my March 2023 drawdown, hit minus 12%, worst in 2 years, reduced size 50%, focused on A++ setups only, recovered to plus 8% in 6 weeks. Without protocol, would have blown account. The Black Swan Protection. SNB 2015, EUR/CHF dropped 2,000 pips in minutes. COVID 2020, markets limit down. SVB 2023, banking crisis overnight. Protection protocol. Never risk entire account. Keep 50% in cash always. Multiple broker accounts. Hedge during high-risk events. I know risk management isn't sexy, but neither is being broke. Master this, and you'll be trading in 10 years. Ignore it, and you'll be another statistic. Speaking of long-term survival, the best trade I ever made, the 10,000 trades I didn't take. Let me prove why doing nothing is your most profitable strategy. The sitting statistics. MIT study of 100,000 retail accounts. Traders who trade daily, minus 3.7% per month. Traders who trade weekly, plus 1.2% per month. Traders who trade monthly, plus 4.8% per month. Less activity equals more money. It's that simple. It was never my thinking that made big money for me. It was always my sitting. Got that? My sitting tight. Jesse Livermore. This man made $100 million in 1929 by doing nothing 95% of the time. The opportunity cost illusion. Trader Wool. A. Takes every opportunity. 500 trades per year. 45% win rate. Minus 23% return from overtrading plus costs. Trader B. Waits for perfect setups. 24 trades per year. 67% win rate. Plus 89% return. The missed opportunities? They weren't opportunities. They were account destroyers in disguise. The patience training program, Week 1, no trading Mondays. Week 2, no trading Monday, Tuesday. Week 3, trade only Wednesday, Friday. Week 4, maximum 2 trades per week. Completion rate, 23%. It's hard. But those who completed, win rate increased 34%. Average R per trade doubled. Stress levels dropped 67%. Income increased 400%. Productive waiting activities. While waiting for A-plus setups, backtest your strategy, sharpen skills, read trading psychology books, exercise, manage cortisol, build secondary income, study market history, review past trades. The paradox: the more you prepare, the less you need to trade. Think like a sniper. 99% preparation, 1% execution, 100% deadly. Your next trade should be so obvious, so perfect, that not taking it would be stupid. Everything else, just expensive noise. And speaking of noise, the next chapter exposes the toxic truth about trading communities. Coming up, why your trading buddy might be your worst enemy, and how social media is designed to trigger maximum FOMO. Part 3. Mastery. From FOMO. Slave to freedom. Master. What if I told you that every trading group you're in, every guru you follow, every Discord you check, is scientifically engineered to make you fail? Stanford researchers just proved it, and what they found will make you delete every trading app on your phone. But first, a warning. What you're about to see might anger you. It should, because you've been manipulated since day one. December 15th, 2023. A famous crypto influencer tweets, "Breaking whale alert. Just saw $50 million buy wall on S.O.L. 273,000 traders see it. 41,000 buy within 10 minutes. Price pumps 12%. Then this happens. The influencer's wallet sold 3.2 million at the peak. The 41,000 followers down 34% average. This isn't random. It's orchestrated. The influence economy exposed. How the scam works. Accumulate position quietly. Create hype with breaking news. Followers FOMO in, dump on followers, delete evidence, repeat. I tracked 10,000 deleted crypto tweets. 89% were pump signals. Average follower loss, minus 41%. Influencer profit, $100K $2 per pump. Real example from last month, trading legend calls AVAX at $40. His entry from on-chain data, $31. Followers average entry, $44. Current price, $35. His profit, plus 13%. Followers loss, minus 20%. The Discord deception. Free signals group, 85% win rate. Reality check. I infiltrated 50 trading discords for 6 months. Real win rate, 31% average. Cherry-picked results posted. Losses never mentioned. Admins front-run every call. The psychology is devastating. You see others winning, fake or cherry-picked. Your FOMO explodes. You overtrade garbage setups. You lose while they profit. The Reddit echo chamber. Remember GameStop? Let's see what really happened. January 25th, GME to 1,000. Price, 76 cents. January 26th, hold the line. Price, 147. January 27th, don't sell. Squeeze coming. Price, 347. January 28th, brokers halt buying. Price, 193. February 2, buy the dip. Price, $90 today. Price, $17. Forums silent. Survey of 10,000 WSB members. Average loss, $14,700. 73% borrowed money to trade. 41% still holding, down 90% plus. 12% developed clinical depression. The echo chamber made them deaf to reality. Breaking the social chain. The 7-day social detox. Day 1 to 2. Mute all notifications. Trading apps, social media, Discord, Shore, Telegram, everything. Day 3 to 4. Unfollow the noise. Anyone giving signals. Anyone showing P&L. Anyone creating urgency. Day 5 to 6. Delete from phone. Move apps to computer only. Check maximum once daily. Only after market close. Day 7. Feel the difference. Cortisol down, 44%. Focus up, 67%. FOMO, gone. My results after 30 days social free. Trades taken, down, 78%. Win rate, up, 34%. Profit, up, 127%. Stress, unmeasurable improvement. Building your fortress, quality information. Only. Economic calendar, facts. Price action, truth. Your journal, data. Everything else, poison. Safe community guidelines. Maximum 5 serious traders. No signals discussion, process focus only. Weekly review meetings, skin in the game required. Remember, if it's free, you are the product. If they're selling the dream, you're buying the nightmare. But escaping social media is just step 1. Next, we tackle the hardest beast of all. March 2020. I lost $73,000 in 4 days. 47% of my account, gone. My wife found me at 3 a.m. staring at charts trying to win it back. Today, that loss was the best thing that ever happened to me. Here's why. The anatomy of destruction. How accounts really die. Step 1. Normal loss, minus 2%. It's fine, part of the game. Step 2. Revenge trade, minus 5%. I'll make it back quick. Step 3. Double down, minus 12%. Just need one winner. Step 4. Full tilt, minus 25%. All or nothing now. Step 5. Account dead, minus 100%. How did this happen? Your brain on losses, cortisol up 400%. Testosterone surges, false confidence, dopamine crashes, desperation for fix. Prefrontal cortex offline, pure survival mode activated. You literally cannot think straight. The Phoenix Protocol. Hour 124. Full stop. Close all positions. Close all platforms. No financial news. No checking prices. Tell someone for accountability. Day 2 S3. Damage assessment. Calculate without emotion. Percentage lost. Trades that caused it. Emotional state during. Lessons available. Day 4 to 7. The reset. Physical reset. Double exercise. Nature time daily. Sleep. 8+ hours. No alcohol or drugs. Mental reset. Meditation 2x daily. Journal the pain out. Read trading psychology. Zero market exposure. Week 2. Paper trading only. Same strategy. 50% position size. Track everything. No real money. Minimum 20 trades before returning. Must be profitable. No exceptions. The comeback formula. Position sizing during recovery. First month back, 25% normal size. Maximum 1 trade per day. A+ setups only. Month 2, 50% normal size. Normal frequency. Confidence building. Month 3, 75% normal size. Adding complexity. Month 4, full size, full strategy. Stronger than before. My recovery, March 2020, minus $73,000. April, plus $3,000, tiny size. May, plus $8,000, building. June, plus $15,000, momentum. December, plus $97,000 total. Recovered 133% of loss. The psychological rebuild. Loss creates 2 paths. Path 1, victim identity. Markets are rigged, I'm just unlucky. Trading is gambling. Result, quit or repeat. Path 2, Phoenix identity. I learned expensive lessons. I'm becoming unbreakable. This built my character. Result, unstoppable trader. Reframe your losses. I lost. X becomes I invested X's in education. I failed becomes I gathered data. I'm stupid becomes I'm learning. It's over becomes I'm just beginning. The market charged you tuition. Make sure you graduate. Prevention protocol. Never again. System. Daily loss limit -3%. Weekly loss limit -5%. Monthly loss limit -10%. Hit limit. Mandatory stop. No negotiation. No one more trade. Most platforms have automatic stops. Set them now. Your future self will thank you. That $73,000 loss, it taught me discipline, made me create systems, forced me to grow. Your losses aren't failures, they're expensive teachers. The question is, will you learn? Speaking of learning, the next chapter reveals the most profitable skill in trading. I could have bought Bitcoin at $1 and $10 and $100 and $1,000. I didn't. And that's exactly why I'm profitable today. The missed trade paradox. Every trade you don't take creates two realities. Reality 1, the trade works. I'm an idiot, could have made 10,000. Reality 2, the trade fails. I'm a genius, saved 5,000. Your brain only sees reality 1, but reality 2 happens 67% of the time. I tracked 1,000 trades I missed in 2023. 312 would have been winners, 688 would have been losers. Net, if taken all, -$234,000. Net from waiting, plus $189,000. Missing trades made me $423,000. The JOMO method, joy of missing out. Step 1, the miss list. Every missed trade, right, setup quality, 110. Emotional pull, 110. Actual outcome. Lesson learned. My favorite miss, NVIDIA, at 460 breakout. Setup quality, 610. Emotional pull, 1010, everyone buying. Outcome, drop to 410. Lesson, high emotion equals bad trade. Step 2, the celebration ritual. For every 10 trades missed, calculate money saved, reward discipline, literally celebrate, train your brain. Step 3, the reframe formula. I missed the move becomes I protected capital. I maintained discipline. I waited for better. I chose quality. The perfect setup patience. Truth, you only need 2 to 3 perfect trades per month. EUR/USD moves 100 plus pips, 6 times per month average. Bitcoin moves 5% plus, 8 times per month average. S&P 500 moves 1% plus, 7 times per month average. That's 21 opportunities. You need 3. My 2023 perfect only experiment, January 3 trades plus 14%. February 2 trades plus 11%. March 3 trades plus 18%. Full year 31 trades plus 234%. Best year ever. Least trades ever. The opportunity abundance reality. Markets existed 100 plus years. Will exist 100 plus more. Tomorrow, new opportunities. Forever. Missing today's move? Like missing one wave in infinite ocean. Another coming in 3, 2, 1. Once-in-lifetime opportunities I've seen. 2008, financial crisis. 2011 gold run. 2013 Bitcoin boom. 2017 crypto mania. 2020 COVID crash. 2021 meme stocks. 2023 AI explosion. Notice a pattern, they never stop coming. The amateur thinks every move is the move. The professional knows better. The master smiles at missed trades because discipline pays more than any single trade ever could. And speaking of payment, your phone just buzzed. EUR/USD hit your alert. Bitcoin broke resistance. Bloomberg says Fed speaking. Discord's going crazy. And you just lost money. Here's why. The attention war. You versus 1,000 engineers at Meta. 500 psychologists at Google. billion-dollar algorithms. Dopamine addiction experts. It's not a fair fight, unless you know their tricks. The notification hierarchy. Level 1, critical only, keep. Major support, JARC resistance breaks. Preset entry signals. Economic calendar, high impact. Maximum 3 per day. Level 2, useful, computer only. End of day summaries. Weekly performance metrics, research reports. Check once at 6 p.m. Level 3, noise, delete forever. social media, anything. Breaking news alerts, guru notifications, price change alerts, 99% of everything. My cleanup results, daily notifications. 127 becomes 3. Phone checks, 94 becomes 6. Screen time, 6 hours becomes 45 minutes. Account performance plus 340%. The sacred tech stack. All you actually need, charting, trading view, free version. 3 indicators maximum, clean charts only, no squiggly lines. Broker, 1, that's it. Reliable execution, proper regulation, no bells or whistles. Journal, Excel or Notion. Every trade logged, emotions tracked, patterns identified. Calendar, economic only, high impact events. Fed decisions, major data. Everything else, expensive distraction. The digital boundaries. Trading hours. Only charts accessible, platform open, alerts active. After hours, everything closed, phones away, life mode on, iPhone settings, screen time, app limits, trading apps, 2 hours per day, social media, 30 minutes per day, news apps, deleted. Android. Similar in digital well-being. The resistance you feel, that's addiction leaving. The focus protocol. Physical setup. Phone in different room. 1 monitor only. Noise-canceling headphones. Timer visible. Digital setup. All notifications off. Browser bookmarks removed. Social media logged out. News sites blocked. Mental setup. Clear intention set. Stop protocol done. Edge defined. Exit planned. Traders with boundaries, 73% higher win rate. 81% less stress. 234% better returns. 100% happier lives. Technology should serve you, not enslave you. Master it, or it masters you. Choose wisely. Now, let's put it all together. 4 years ago, I was you. FOMO controlled every trade, lost 67% of my account, nearly quit forever. Today, I trade 2 hours a day, stress-free, consistently profitable. Here's the exact transformation path, the 5 stages of trader evolution. Stage 1, unconscious incompetence. I don't know what I don't know. Random trading, following gurus, constant losses, blaming market. Stage 2, conscious incompetence. I know what I don't know. Recognizing problems, seeking education. Still losing, but learning why. Stage 3, conscious competence. I can do this with effort. Systems in place. Discipline building. Small, consistent wins. Requires full focus. Stage 4, unconscious competence. It's automatic now. Trading is boring, process natural, consistent profits, effortless execution. Stage 5, master teacher. I help others transform. Trading funds life. Teaching gives meaning. Legacy building, circle complete. The integration protocol, technical mastery, 20%. 1 strategy perfected. Risk management automated. Entry, exit mechanical. Edge clearly defined. Emotional mastery, 50%. Stop protocol automatic. Breathing integrated, triggers identified, responses programmed. Lifestyle mastery, 30%. Morning routine sacred. Exercise non-negotiable. Sleep prioritized. Balance achieved. The secret? Emotional mastery is 50%. Most focus 90% on technical. That's why most fail. Your 90-day transformation. Days, 130. Foundation. Implement morning routine. Master stop protocol. Clean up technology. Begin position sizing. Results: -5% to +5% learning curve. Days 31 to 60. Integration. Social media detox complete. System fully mechanical. Patience developing. FOMO. Weakening. Results: +5% to +15%. Consistency building. Days 61-90. Acceleration. Everything automatic. Discipline natural. Profits consistent. Stress eliminated. Results: +15% to +30% plus. Compound effect. The daily success ritual. Night before. Review tomorrow's calendar. Set only critical alerts. Visualize perfect execution. Sleep by 10 p.m. Morning, 4:30 a.m. rise. Cold exposure. Exercise, meditate. Market prep. trading, stop before every decision, system followed exactly, emotions logged, exits pre-planned. The identity shift. Stop saying, I'm trying to control FOMO. I hope this works. Maybe I'll be profitable. Start saying, I am a disciplined trader. I follow my system perfectly. I am consistently profitable. Your subconscious believes what you repeatedly tell it. Tell it empowering truths. You now have everything. The knowledge, the tools, the system, the path. The only question remaining, will you walk it? The epic conclusion. In 2019, I stared at my blown account. $127,000 gone, marriage strained, confidence shattered, rock bottom. But rock bottom became my foundation. That pain, my greatest teacher. Those losses, my education, that failure, my beginning. Today, I don't trade for money. Money is the byproduct. I trade for freedom. Freedom from FOMO. Freedom from stress. Freedom from the 9 to 5. Freedom to live. The FOMO-Free Trader's Manifesto. I am a capital protector first, profit seeker second. I celebrate patience as my edge. I trade my system, not my emotions. I measure success in discipline, not dollars. I embrace missed trades as bullets dodged. I honor my stops as sacred protection. I see losses as tuition, not failure. I choose quality over quantity always. I know opportunities are infinite. I am becoming who I'm meant to be. Your next actions. Right now, while motivated, download the FOMO Freedom Toolkit, entry checklist, risk calculator, journal template, all free, link below. Take the 30-day challenge, join 10,000 plus traders. Daily accountability, weekly group calls, transform together. Subscribe and hit the bell. Tomorrow, the 5-minute pre-trade ritual. Thursday, live trading psychology session. Saturday, Q&A, your biggest FOMO questions. Comment your commitment. Type, I choose discipline. Make it public. Make it real. This video changed my life. From minus 50% to plus 140% in 6 months. Robert K. Finally profitable after 5 years of losses. FOMO is dead. Sarah M. Wish I saw this 100K ago. Starting fresh with discipline. David L. Look, I know you've heard promises before. Gurus selling dreams, systems that don't work. Hope that turns to disappointment. This is different, because this isn't about a magic indicator, or a secret strategy, or getting rich quick. This is about becoming who you need to be, to get what you want to have. The market doesn't owe you money, but it will pay you exactly what you deserve, based on who you become. So become unbreakable, become disciplined, become free. Start today. Start now. Your future self is watching. Make them proud. See you tomorrow, same time. Stay disciplined, my friends.